This is just on Tuesday, December 6th, 2022. Let's start out by looking at SPY. So we had another day of selling. We sold all the way down to the 100 and got a little bit of a bounce. It was pretty much a flat open, but was really nice just talking through like the 10 EMA setup. So follow the link if you don't know what that is. Link in the description. Right out the gate, we went sideways, broke down, and put in a new low within the first 20 minutes of the day. And so that's a signal saying, okay, well, looks like we're going to move in that direction, or at least let's look for a 10 EMA setup now that we've broken the previous day's low. So initially, you could have taken this bullish if we moved up above the bear candle after we had broken down, but we never got back above the 10 with, a bear candle closing up there and taking that candle out. But otherwise, this would have been a setup. Again, if we had started the day out in a different place, like below the low or above the high. But from where we're at, this candle is a bull candle closing below the 10. All you need to do is set this up with, with SPY, trading it below there, and a stop comfortably up here, probably even just right here, and aggressively like right at that level, which pretty quickly it moved down, and you could actually just exit the position after these 5 bear candles. That's one way to go, or hold through this retracement and get your stop probably to break even, and then as this rolls down with this candle, move your stop again, so you would lock in a gain. It just kept rolling down, similar to what we looked at yesterday. You have a really nice consolidation here that breaks down even more, but let's go look at an option. So if we jump over to the 400 strike put that expired today, here's the same setup but flipped. It is getting into the put, so buying right above that candle, and a stop, like I said, down here would be very loose. Here would be a little more comfortable, here would be aggressive. So that's getting in, let's just say it's here by like that. So that's about $1 risk. Getting in, I think this is about 260. Let's turn these off and get out of here. So the high was 254. So yeah, getting in at 260. So stop limit buy at 260 and a stop down at 160. That's $100 risk, and then you can hold on to that. These 5 bull candles, actually 6th bull candle, but that one didn't trigger yet. So you're in at 260. You get out at 384, something like that, and it's a quick gain. That's a nice 1.2 R gain. If you get out at 4, that's a little bit more, 1.4 R. If you did not get out there and you just held through this, which after yesterday, it kind of makes sense to look for a larger gain. You're going to hold through a pullback, and then once this starts to move, you can tighten up your stop below that, and just kind of trail your stop all day. We have very similar things happening with kind of the pullback here, breaks out, pullback. We've got some consolidation. That's bad line. Got some consolidation here that breaks out, and then we just kind of ride the 10 back up, pull back. So at each one of these, you can tighten up your stop, and then tighten up your stop, and then, well, this key, you don't want to get your stop too close, so you're going to be a little bit below. At least right here, you're right around 1R if you get stopped out there. As this goes sideways more, but doesn't, it doesn't go down. That's a good opportunity to just kind of wait it out if you wanted to do that, but that needs to be your plan for what you're going to do. You're making the lower highs here, so it's compressing, and then it breaks out. So at this point, you can get your stop up below here. It continues to move on up. You want to see a good strong candle, something like this, or a bigger move up before you move your stop again. Then each of these pullbacks, you want to look for, okay, wait for that to bounce, and then you get your stop tightened up. This is probably another good place to get your stop tightened up. So up here, our stop is up around 6. We're in at 260. So we've more than doubled that option, and you're just looking to just kind of continue to trail. That's one way to do it. Any sort of retracement is going to take a lot of premium out, especially later in the day. This is something that, getting that quick gain and just moving on for the day is really nice to do. But even if you would just continue to trail, if you had your stop here, and then it's like, okay, we got back down through the 10, we're back below the 10. This is really the first time we've got some candles, we had below the 10, we were going sideways here. At this point, we're still going sideways. But if your stop was here, your stop got hit right there in that candle at about 7 or a little bit under 7. So that's one way to play this. Looking at SPY, I'm guessing some other things moved similar today. Let's go look at what SPX did. And let's zoom in on this. Okay, so very similar. We took out the low within the first 20 minutes, same kind of candle setup. Let's go, oops, let me just zoom in. Can we frame, so we can frame the day up the same? This is what we usually do before, but now we're switching tickers and I got to do it again. So same thing, we ran down to the 100. Let's go look at, oh, and back with SPY, here is the 395 call that you have the same kind of setup where it's, breaking down below a candle here and just continues to go down all day. So you just have that confluence across the different options. But if we go over to the let's see, what was the price? Let's just look at the, sorry, I'm kind of all over the place. Let's look at, I think 39.75. We'll look at first and see what the cost is of that. So let me punch that up. So let's go SPX during the week expiration, and then 39.75. And I could go over to the trading tab to get that, but don't necessarily need to because I know how to type it in. Okay, so this candle's range is 3.4. Cannot get that with $100 risk, so we'd have to go further on the money. Let's go look at 39.50 and see. Now it's going to be less expensive, but we have to hold on to this a little longer. Okay, the range of this was 1.33, so we're still not quite there. And we've got technically 6 minutes to really have this set up, because after, this next candle here is inside candle. So the next one I would have tried, and I didn't take any trades today. I was tied up when this was happening. I was in meetings this morning, so I missed out on this. I glanced at the market just about right before 8:30. I'm like, okay, nothing's gapping today. It was like flat opens across the board. It's like, I probably won't trade for the first hour, so I didn't expect to look at it till after an hour, and I just didn't keep an eye on anything with meetings. So, okay, here we are. Okay, this is the 39.25, and this is one where you could have just bought at 1 and stop at 0. So an absolute 0 play. This actually would have worked rather nicely. It would have actually triggered on this same candle. So would have gotten in at 1, or you could have gotten a little bit tighter on that and gotten in at 0.9. And then it would not have hit a target. Well, you would have, let's see, you would have set a target, even a 1.2 target that would have been selling at 2.1 or 2.2, depending on where you got in. So that would not have filled here. Well, 2.1 maybe, 2.2 no. So you're holding on to this trade longer. It's bouncing back down nearly to 1, so you couldn't really move your stop or even set a stop till a little bit later. So I like how small the candle is, but I also, the other way you could do this is buying, you could even buy 2 contracts because that's not quite enough room. I'd probably, think we'd go back maybe 39.40 strike. So what was this doing? 39.40, that's 0.8 range. Yeah, this one's better. So buying about 1.8, stop down at 0.8, that would have been a better setup. Yeah, right around 0.8. Okay, so I like this setup, buying at 1.8, stop at 0.8. Your 1.2 R target is at 3. It easily got there, or this is a situation where you could have held through that move and then not gotten out, held through retracement, and then very quickly here it gets into this consolidation. And I think it's actually in this consolidation a little bit longer than what we just saw on the SPY. I think this just went sideways longer. At least the low here to the low over here wasn't as large. So I think in this case it would have been better to trade the SPY. But here's the caveat. You're going to be, you just don't get the movement as much here where SPY is moving a little bit more, because you can get into an option that's closer to at the money. This is further out of the money. So you need to know that you're going to be in this longer waiting for something to happen, and it's more likely it could get you stopped out. If you can set up the rules and set up the trade to, you're only going to get in on those conditions that are ideal, this is the kind of day to do that, where obviously hindsight, we know that we had these bigger pushes up, and if you can hold on through all those, you're going to have that kind of a home run trade, because this setup tells you could have gotten in at 1.8, and if you're just going to trail, staying below, these bigger candle moves, staying below these, even this is hard to hold through a pullback. When this is pushing up here and it gets up to nearly 12 and then hits 12 and then pulls all the way back to 9, it's like, oh man, you just gave back 3R. Is it going to go? And then from here at 15, pulling all the way back to 8, you're basically cut that gain in half. Or yeah, actually pretty much cut it in half. So those are tough ones to hold through. You got to practice that and do it with small size, but recognize it's real money you can cash in on. If you're okay with that big of a pullback and not like getting out here and re-entering here, then if you can hold through something like this, you have a better opportunity of selling closer to a high, or the high of the day, I should say. But still, you don't know when this is going to happen, and it's not going to run back up, another time and give you another opportunity. That's the kind of thing, just getting a feel for how this moves. Learning how a ticker specifically moves helps a lot. Also, if you have lines in your charts, which you've got lines down here a little further away, probably the 100 would have been the best place for a target. So 39.29. So that would have been 39.29. So right in here actually would have been a good place to get out. So that was right at 12:30. So at 12:30, yeah, probably getting out about 14. So if you've gotten in, 1.8 and held it up to 14, that's a good day. That's a really good day. Because it could easily have just bounced off of the 100 and then sunk all the way back down to nothing. It did end up rolling over, push back through. But look what we've got here now. We've got a head and shoulders on the option that ended up breaking down, and then the option went to 0. If we look at what happened here on the SPX chart, we have kind of similar setup, but obviously flipped, where you have kind of inverted head and shoulders. It's still kind of got a slanted downward neckline, but we'll see if that leads into any sort of a bigger bounce tomorrow. So hope this helps. This is Justin. Thanks.